Okay, cool. What's up, man? How's it going? Good to see you. Let's do it. We're gonna start off by just back testing today because it was the first day, right, that we actually had a thesis that I didn't trade in a while, and I want to show you guys exactly why I didn't trade in expectation of my own model. Yeah, Forex replay is good. Trading View is also good. I tend to actually use Trading View, and I'll show you exactly how I backtest in Trading View. Just because on Forex replay, I don't have all of my indicators, nor do I have my chart set up. But you can, if you find yourself cheating ever on Trading View, which like pretty easy to do, like you find yourself looking ahead, then I would recommend using Forex replay. I'm going to show you today though how I use Trading View so that I don't cheat myself. So I actually take the trade with wins and losses. It's a pretty interesting way of doing it. You'll see it's pretty simple, but you have to keep yourself honest because, you know, with Forex replay, you can guaranteed not look ahead, for example. With Trading View, you have to be very careful not to cheat yourself and say like, oh, I would have taken this, I wouldn't have taken that. It's pretty common to do that. I'm also going to record this session just because I know some people can't make it, which is absolutely fine. So I'm going to have a recording going as well, which I'll publish after. And yeah, let's do it. So we're going to start with just today, and then we're going to do a random week, okay? So when I say we're going to do a random week, I'm literally going to go to my weekly calendar, like my weekly chart here, pick a random week, and we're going to use my model every day, and we're going to use things like weekly profiling, and then all the way down to like, you know, daily bias and entry techniques, okay? Okay, let's start off with today, because I know a lot of people in my DMs today said, like, why didn't you take that trade? If you had the bias, right? Why did you not take the trade? I'm going to show you why. So every day, our backtesting is going to look something like this. Okay. I'm going to start off each day. First of all, I'm going to start off each week. So say let's do this week as it starts off. I'm going to start every single backtesting session or just analysis session for my weekly forecast on the weekly chart, okay? Or the monthly chart if there's a monthly key level of interest. So what I'm going to notice is that we just had the new month open. This is March, right? You can see here. Now the likelihood of us trading into the previous month low and the previous month high is quite high, right? Generally speaking, we rarely have inside bars of monthly candles. So whenever there's a new month, we want to mark out our previous month low and our previous month high, right? Just like we rarely have inside bars for weekly candles or daily candles, it's the same logic applied in this monthly chart. So now I'm going to hop down to a weekly chart, and I'm going to show you how I would, right, approach back testing or forward testing the past couple of days. So mark out previous month low and previous month high. Okay. Now we're on the weekly chart. What I want to do is apply my next day method that I do for, thank you, Pierre. What I want to do is apply my next day method that I do for the daily chart to my weekly chart, okay? So what I'm going to notice is the key market structure that forms around this weekly previous week candle closure. So as you can see, we get a closure through the previous week low. This gives me a bearish bias for this next week, with the draw on liquidity being the previous week low. So in this case, we have previous month low and previous week low at the same level. So that's going to be my draw on liquidity for the next week. I'm also going to pay attention to any key higher time frame divergences the market has formed, right? As you can see, we have this key time frame divergence right here. Okay, perfect. Now let's go into the daily chart. Like I said, we've seen distribution, right, over the past month into our higher time frame sell side liquidities. So what I'm thinking immediately when I see a range like this on the daily chart is that I want to see if price can eventually come back up and rebalance some sort of discount of this entire dealing range. So I'm also going to mark that out. This is the higher time frame dealing range, right? The daily dealing range. And that discount level here, right, is going to be essentially what I think the previous month, after a sweep of the previous month low, right, we will trade back into. So on Monday, as you can see, I'm going to apply that same logic to this daily candle and go from there. So based on Friday's closure here, you can see we had a wick below and a closure above. That gives me the draw for Monday of previous day high. Okay. So on Monday, which was yesterday, I'm anticipating previous day high to be engaged in the market. Okay. I'm also looking at this entire body, and I'm saying if a swing point is going to form somewhere between low and the high, I'm looking at equilibrium. Okay. Get rid of this for now. I'm then going to go into my hourly chart. Okay, so this is Monday. And as you can see, we've gapped up, right? And we've taken out the previous day high. So once we've gapped up and taken out the previous day high, I'm looking to see if there's any key levels that we are diverging at above previous day high, right? So if I go to my higher time frame charts, I'm going to mark out just the major liquidity in the market above previous day high. That was my draw on liquidity for Monday. So now going into the session, right? We're going to wait till 8 a.m. prints, always, and I'm going to study the protraction profile. And this is something that yesterday I actually missed, which I added to my journal. So I did not have this high marked out. I just didn't see it in this range. I only was looking at the range high in here. I wasn't looking at these intermediate term highs. We form a divergence, right, at this buy side of liquidity at 7 a.m. I always wait for 9 a.m. to do any trading, but I'm going to study 8 a.m. as well. So we can see we form that SMT, right, at 7 a.m. Provides a reversal. 8 a.m. is an inside bar. And then as you can see, well, we know what happened yesterday, right? We sell off. So there was no trading model for me in here yesterday. And we talked about this on my stream, right? 8 a.m. did not manipulate a key level. It would have to manipulate above some external range liquidity. This was a 7 a.m. reversal. 9 a.m., therefore, cannot be qualified as the reversal candle because it doesn't sweep with SMT, that key level. It was happened to 7. So we let this play out, right? 8, 9. The only trade I could have taken yesterday, which we talked about, was 10 a.m., right? But again, we knew we had a bearish bias after this, so we let it play out. Okay, so that was yesterday. My trading model didn't appear, right, on the sell side of the market. Now look, we're going to do this exact same thing for today. So yesterday, we had a wick above the previous daily high into a daily fair value gap, and we had a closure off the high towards the low, sweeping out both the high and the low. The draw on liquidity for me for the next day is going to be the previous day low. Okay, you can go and watch my video or T-Trade's video on just the daily bias closure methods. For me, this is also internal range liquidity, trading into external range liquidity. I'm going to look left and see what else we could trade into. I see we have more liquidity in the form of sell stops and relative equal lows in the market here. So this is where my eye draws to for Tuesday, which is today. Okay. Based on this daily close, I also have another higher time frame level. Again, this is all working off the daily chart. What I'm going to do is I'm going to mark out this opposing candle right in here. If we are bearish, opposing candles are going to offer resistance, or they're going to offer, right, a point of interest for reversals on the lower time frame. So I'm considering this up close candle as a potential area of reversal for the next day with previous day low and external range lows as my potential draws. I want you to pay attention to how much time I spend on my higher time frame charts, because the hourly charts and the 15-minute charts and the 5-minute charts simply bridge these higher time frames. My targets are almost never based on anything lower than a 4-hour chart. I'm just trading the lower time frame charts for entries. Okay, so now same thing as always. Let me get rid of this for now. I already traded into it. I'm now considering a high of the day to form somewhere inside of this order block and waiting for the New York session to open. What I can see is that London and Tokyo offer an accumulation of the market trading into the daily order block. Importantly, I see no SMT. Okay? So there's no divergence of any highs inside of this range. I'm now going to mark out the range high. And if you were on stream today, right, in my premium server, you know exactly what I was looking for with that logic. Okay? So here's our daily order block we engaged. I'll just move that off to the left. Here is the range high with no SMT. And I'll keep that on my chart, right? As you know, the way I profile a daily candle, I'm going to be looking for an SMT to form at the daily high or low in almost all cases. If we don't form an SMT at the daily high or low, I'm going to consider it to be a higher resistance liquidity run, and I want to look and trade towards the creation of that daily high or low. Okay? So in this case, we have a range high with no SMT. I'm going to keep that marked out, and I have previous day low as my draw with the external range lows. Let's play price out until the AM session. Okay, 7 a.m. distributes into previous day low. Gonna wait for 8 a.m. to print as well. Okay, we have no SMT of the previous day low, and 8 a.m. comes back in the range. Now, like we talked about this morning, we would need to see, right, a significant closure above this series, all of this series in here, to look for the range high, right? That's why we didn't take a trade this morning, because we simply said that 8 a.m. in here, right, did not form any good SMT at this previous day low, right? And all of this would need to be closed back towards for us to see the other side of the range. So we wait for 9 a.m. And what do we see at 9 a.m.? Right? We saw price come back into this imbalance. We're waiting for SMT to form. Remember, no SMT at the lows. And eventually we get the sell-off, which is why we don't trade longs. We also don't trade shorts, because if you look at our hourly chart, right, in here, this fair value gap, I'm still missing that framework, guys, to go short, which is going to be an SMT at this high of the day. I don't like the fact that we've accumulated the range, right? We've distributed lower without creating a strong high of the day. So if you think of your daily candle, I don't believe that this daily high is going to stay intact. So now I'm actually seeing if any SMT can form at the lows. Again, we distribute it into the external range liquidity here on the NASDAQ, or on the ES, and not on the NASDAQ. So I'm considering maybe 10 a.m. could be a reversal. All right, so 9 a.m. is distributing lower. Again, you can trade from this internal to that external using my Primo model if you want. Right, so we have an hourly swing point in here. Or sorry, we have an hourly imbalance in here, and we form this 5-minute divergence. As soon as price closes through this candle in here, that's our change in the state of delivery. And you can look to short the market. We talked about this morning. Now, the reason why I don't take this short is because we don't have a good high with SMT. I don't want to trade this second phase of distribution without seeing first a better high put in for the daily candle. So I'm considering price to potentially reverse today. So I don't take that trade lower. For me, right, this is very messy in here, seek and destroy, and I'm not interested in taking price lower, which eventually you can see delivers on both indices. Okay. It's now 10 a.m. How would I trade my model today, right? What would I do? Well, again, I have the logic for which direction I want to trade my model in. The direction I want to trade my model in is long, not short, which we talked about. So what I'm doing is I'm looking to see if we have any form of divergence at these lows. That has to be something that's a qualification for me to take a reversal. I'm going to zoom out. Okay. We both take out this external range low, so it's obviously not this SMT in here, but I can see this SMT. Price tags a daily low on the ES that does not tag on NASDAQ. So here is my external range divergence. Again, NASDAQ is more bullish, clearly. Okay. This is the divergence. If you guys go look at my market analysis channel, right, we say that we might be able to get a reversal from here to these highs, but I don't want to trade this as a low. I don't want to take this trade, because essentially you'll see when I get this change in state of delivery in here, I'm uncomfortable with risking, 140 points. Now, the draw on liquidity is 400 points. So in hindsight, it would have been a great trade, right? And again, this is a delayed protraction. It fits all the elements of my model, and I'm trading that 10 a.m. candle 2 with all 3 criteria, right? What I'm looking for is a 9, if 8 a.m. forms C2. I'm looking to trade 9 a.m. as a continuation. Right? If 9 a.m. forms C2, I trade 9 a.m. as a reversal. If 10 a.m. forms C2, I trade 10 a.m. as a reversal. So there's only a couple of options for my trading model, right? In this case, I can see 8 a.m. did not form the reversal towards my drawn liquidity. Okay, so I'm not trading 9 a.m. as a continuation higher. 9 a.m. did not form a reversal towards my drawn liquidity. So it's only one option, is to trade 10 a.m. as a reversal candle, meaning this in here should be the low, right, of that price leg and the low of the day, because it's qualified by 3 things. SMT, higher time frame array, then we get our change state delivery, right? So this is essentially qualifying this hourly low and this 4-hour low as the low of the day. In hindsight, this would have been a great trade for me to take, and potentially I should have taken it. I just was uncomfortable trying to catch the bottom, and I didn't necessarily love this accumulation that I saw in NASDAQ in the morning. I thought this would be higher resistance to trade through, but obviously, hindsight's 2020, right? We never get stopped out, and then it eventually delivers to our draw, right? So that's nice. You can see that eventually, like we talked about in terms of logic, we reprice the daily high with SMT, right? So we actually end up taking out this range high that has no SMT, and that's exactly what we get down here is a 10 a.m. reversal, right? So it's pretty nice to see in hindsight. As you can see, the relative strength is obviously with NASDAQ, right? And then, of course, it's NASDAQ that actually prices in that high. ES doesn't. So it's a nice confluence, okay? So that was how I backtested like a day like today and how I'll backtest every day. But I just wanted to do today because I got a lot of questions in my DM saying like, why didn't you take this trade, right? Like you tape read it, but why didn't you take it? And the simple answer is that like I was just uncomfortable with risking 140 points. And then I only trade, right, at 9 or 10 a.m. for my model. So I need the 3 scenarios to appear, right, or show themselves before 10 a.m., right? Either 8 a.m. reversal into 9 a.m. continuation. That's scenario 1, 9 a.m. reversal, or 10 a.m. reversal. I only have those 3 options, and I was uncomfortable with risking 135 points, and I didn't want to trade after 10 a.m. That's the simple answer, okay? Mostly because my risk today was going to be $250, and it didn't even allow me to size properly with one contract. It was less than one contract, so that's why. But, hindsight's 2020. So let's take a look at a random week and apply this exact same logic to each daily candle, and we're going to go through that and see exactly how we'd approach trading it and how we use our Primo model. I am recording it, yeah. So let's take a random week, okay? I'm going to go to the weekly chart. Someone tell me a random week so I can't like cherry pick it for you guys. Just give me a random week that we still have data for. First October 2023, February 12th. All right, I'm going to take the 3, jumble them in my head, and pick one. Someone give me another week. 16th November 2024. Well, that's very specific. Let's do it. This week. Right? Yeah, let's do this week. Okay. Fantastic. What am I going to start with? Always. On my weekly chart, I'm going to look at the relative structure for the next week. So what I can see here is that we have swept out a external range high on NASDAQ. That same external range high is right here on the ES. Okay. ES is relatively stronger. ES is trading above that, and I have a closure back in the range. So after we sweep out that external range high on NASDAQ, I get a candle that wicks above and closes below on both indices, both NASDAQ and the ES. So my draw on liquidity for this next week becomes the previous week low. I will also mark out the previous week high, just so I have a context of the dealing range for the week. Let's add something like this is the draw on liquidity. Again, based on our higher time frame analysis. Cool. So that's our weekly chart. Now that we've done our weekly analysis, right, we're going to mark out any failure swings to the draw on liquidity or liquidity that rests below the draw. So in this case, you can see I have equal lows. This is the form of sell stops. I will also mark out these equal lows in the market, right, on both indices. Perfect. I'm now going to go down to the daily chart. I now have my key levels. Friday's close is quite bearish. So because of Friday's close, right, I'm anticipating Monday to do what? Draw in to the previous week low, okay? I'm anticipating something like this to form based on the daily dynamics. Open, low, trade back into the range, and then maybe trade lower for the week. That's kind of what I'm looking for on the week, but I'm going to take it day by day based on my bias. Okay, so for this week, for this Monday, I'm looking for price to potentially draw into the previous week low. And if that's going to happen, I would like to see a swing point form somewhere in premium of this previous day's range. Perfect. Let's go down to the hourly chart and wait for the New York session to open. See what information is offered by the prior sessions. Okay, so as we can see, we have Tokyo opening up without either index taking the previous day low, which is fantastic because that's our draw for the day. Right? We're going to see a swing point be created on some time frame between 6 a.m. and 10 a.m. essentially, this 4-hour chart. I'm going to wait for 8 a.m. to print. Okay. What do I see here at 8 a.m.? At 8 a.m., I see that we have, again, I'm going to look at the whole day so far, right? I am anticipating this low to be taken down here, previous week low. That's my draw. What is the market structure telling me at the close of 8 a.m. with respect to the two previous sessions? Well, first of all, I'm going to note the SMT divergence at the range high. This could be my potential high of the day. Okay. I can qualify this SMT divergence at the range high as a potential high of the day. So what I'm waiting for, right, is a candle 2 formation in the direction of my DOL, right, at 8, 9, or 10. If it forms at 8, I don't trade 8, I wait. That's the best way to say it, with not intentional alliteration there. I don't trade 8 a.m., I wait for after 8 a.m. But if it forms at 9 or 10, I'll trade that reversal candle. Okay, so what are my key levels that I could see a potential reversal lower from? Well, the first thing I want to note is that we have this low in here being swept out, the Asian low with some SMT. So obviously, I'm not going to short into this 8 a.m. candle. Okay, let's go to the 5-minute chart. And you'll see 8 a.m. comes into the range low, right? And offers a strong reaction off the SMT at the low. It's a 50-minute chart. Okay, we're going to wait for 9. Okay, 9 a.m. pushes up higher. Again, here are my hourly levels. I have some hourly liquidity that rests up here. I'll mark that out. Okay, I'm considering 9 a.m. could be a potential reversal, right? Ah, okay. So now I can see, again, I don't want to cheat, so I'm not going to go to my hourly chart, but here's what I'm showing you. Okay, don't ignore this candle. Pretend you don't see that candle. Why am I marking out that high? The reason why I'm marking out this hourly liquidity here, and the reason why I'm not trading long, is because I have a disposition to say I want to see market trade lower. Okay, so I want to see the market go lower. The longs that are forming at 8 a.m. are against my daily draw on liquidity. So I'm going to instead mark out the other side of the range and say, if we can form divergence there, I'm more interested in trading towards my draw. You'll see frequently your model will appear on both sides of the market. That's how the market prices, that's how the market prices in, price. So you'll notice that your entry model will form, whether it's a breaker, right? Whether it's an inverse fair value gap, whether it's a turtle soup, right? Whatever entry technique you have will form on both sides of the market because the market is efficiently delivering price from swing points like highs to lows. However, you want to distribute your trades and you want to trade alongside what you believe to be the daily draw on liquidity, which is why, for example, today I traded long and not short. You want to align your entry techniques with something that you heard me say all the time, which is your narrative, right? Which is where and why is price going to a level? Well, for me, I can tell you with certainty that I don't believe that price is going to come above the range high. Why? Because we have a bearish daily bias, we have an SMT formed at that range high, and because price has failed to manipulate previous day low, which is going to be the failure swing to the level it manipulated to. There is my where and why. So now I just need to align my entry technique with that where and why. I want to see SMT here, potentially. It could also form here. Okay, I want to see SMT form above a short-term high. I do not want to see the range high taken. This is going to be my high of the day. Just like today, the range low would be my low of the day. So anything between this range high and this manipulated low is now my dealing range. I want to see price sweep out some liquidity inside of this range and not trade higher, but instead trade lower. This divergence in here does not interest me, okay? This is not a significant reversal because it lacks the narrative of delivering to my draw on liquidity. And that's as simple as I'm going to say it. Like my specific model requires you to have a direction that you want to trade in because the pattern will form on both sides of the market. And you'll see it on a day like today. If you look at the 1 hour fair value gap, a bearish Primo model C2 formation forms, right? And if you look at a day like today, a bullish Primo model is going to form in here. I want you to recognize that I'm not going to trade it just based on the pattern. I'm going to trade it based on which side of the market I want to be aligned for. That's the important distinction, okay? So I'm going to wait for the SMT to form based on those levels. And this is going to be my double purge. I'm expecting price to come back into this low. So let's go back to the 5-minute chart and wait for our alignment. So 8 a.m. is not a reversal candle towards my draw on liquidity. Okay, I see 9 a.m. open. I'm waiting for 9 a.m. to form a divergence. Nice. Okay, so 9 a.m. forms a divergence at my hourly key level. I'm going to get rid of the higher SMT. And I'm going to mark out the divergence that forms at my key hourly level. I am now waiting for a change in the state of delivery, which is defined as the consecutive series of opposing candles into my key level with divergence, right? So SIST, consecutive series of opposing candles into key level with SMT. That's a mouthful, isn't it? Sorry. That's how I define, right, a change in state of delivery. So the key level here is hourly liquidity, H1 ERL. That's a swing point in the market, H1 ERL. I'm going to be using that as my key level. Now, the consecutive series of candles into that key level are these 3 consecutive series of candles. A closure through them is a change in the state of delivery. Right? What I want to do now is short the weaker asset. So I can short on the retest of the change in state of delivery, expecting a swing point to form no higher than 50% of that order block, right? So I'm going to take a short position here, be covering the hourly wick, the wick of the reversal candle. This is C2 high that you're covering. And you're following through for a distribution to at least 2R, but to your draw on liquidity. Okay, you can also use something like a standard deviation projection if you would wish to add that, right, and see where that lines up with. So again, price plays out, and you can see price stops you out here. It doesn't mean it's a bad trade. It just means that this was a stop out. It's a good loss for your model. So what price does, eventually takes out the range high, comes back into equilibrium, right? So this is a losing trade. Again, I had no idea how price would deliver here. It delivers 1.64R before stopping me out, and that's the way it goes. Previous week low was not engaged. The draw did not get hit. Again, it's a losing trade. So say -1R day, and you move on. Okay, cool. Let's do the next day. So again, you can see in this case, we did not come into that key level. This 8 a.m. formed the low of the day, and the draw on liquidity for my daily candle was not hit. Every trading model is going to print you losses, and you can see in real time, I just printed a loss for myself right there using the same logic that I applied, right? Using that as my draw on liquidity. Okay, let's get rid of all these levels, go to the next day, and see what happens. So Monday closes, coming back into discount of the range. And again, we're going to apply the same concept for the daily chart for Tuesday. So what I can see on my daily chart is we have previous day high, and we also have an imbalance. Here's an imbalance. Again, this is an inside bar, right? So we can see in here, we have an inside bar daily candle. So I'm expecting price to potentially come back into the imbalance and trade lower. That's a simple thesis from internal to external, right? With my previous week low being the draw. Nothing has changed so far. Let's see what happens. Wait for the session to open. So maybe we'll get that previous weekly low overnight in this session, right? So that happens as well. 7 a.m. is here. Let's play 8 a.m. out. There we go. So this Monday induced these lows, and then we end up taking it here at 8 a.m. Cool. I'm going to let 8 a.m. print. Obviously, there's no reversal here, right? But I'm thinking that price might want to continue lower, but there's no entry model for me here. Okay, 9 a.m. We come below the previous week low, okay, on both indices. The only way I can trade 9 a.m. as a reversal candle is if A, my draw has been met, which it has, the daily low, previous daily low, and B, I see SMT below this low. So I have to zoom out and look left. Okay, I have to see SMT below the previous week low on the hourly chart. I'm going to mark out that liquidity. Okay. Both indices take out this low. Both indices don't take out this low. So I don't have a significant divergence on the hourly chart for me to frame 9 a.m. as a reversal. So I'm not going to trade 9 a.m. either, right? So far it's just an accumulation. Let's play the next candle. Okay, there we go, right? So today I'd take no trade because I wouldn't see a divergence at the lows that I liked enough. Go to the daily candle or 4-hour candle. I didn't see anything I liked at the lows enough for a divergence. Right? Both indices did not come into this level. I'm going to sit out this day. Let's go to the next day. So that'd be a day like today where I have no entry because there is nothing that fits my model. And we get most of the movement happening in the overnight session. It's a tough week to trade, actually. Okay, so the next day, what we can see is that we wick below the previous day. And we close above. Nice. My drawn liquidity is now going to be this previous day high, especially because we get a candle body closure through the high. Fantastic. This is a nice continuation pattern on both indices. Despite the fair value gap, I'm getting a bullish close to my daily candle. Now, I have a large wick to the sell side. So what I'm going to do now is I'm going to mark out the halfway point of this wick and say if a swing is going to form, it might form in this discount area of the wick. Perfect. I now have my draws and liquidity for the day, right? I'm also going to mark out the failure swings to that level, such as this imbalance of the market, okay? Get rid of this fair value gap. We know we're in daily fair value gap. Let's go to the hourly chart and wait for the session to open. Right, you're noticing it's the same things. Okay, wait for the next day. So Tokyo opens up, takes out the previous day high. Again, I can study price all the way until 8 a.m., 5 a.m., 6 a.m., 7 a.m., 8 a.m. Okay, so what do I see in here? My drawn liquidity has been met, previous day high. We have higher prices, higher draws, above market price. I have to study what has happened in the 2 sessions before because my draw has been met. Well, the first thing I've noticed is that we have some divergence forming at this high. So I'm just going to mark it out. Okay. Hourly high with some divergence forming. Do I have a high of the day with SMT? Yeah, I do. Right? London might have created this SMT right in here, the high of the day. This 8 a.m. candle, therefore, let's see if I have any SMTs at the low of the day. I don't see any SMT at the low of the day. Okay, here is the low. There's no divergences, so I'm going to mark out the liquidity that rests at the low of the day. The Asian lows. This is my range. Okay? So now I'm saying if price is going to come off of previous day high and potentially come back into this range, it might want to draw into, well, you can see, right? We have this low right in here and this low right in here. So I'm going to qualify if anything happens up here of interest at 8 a.m. Okay. I don't see any SMTs at the highs, really, right? I just see some consolidated highs. Again, we have this higher time frame SMT, but nothing super interesting at 8 a.m. So I'm going to leave it until 9 a.m. Let's go 15 minutes at a time. Okay, there we go. 9 a.m. opens and immediately trades lower. 9:15 comes into these lows. What happens to the equities open? 9:30 absolutely dumps. Great. Perfect. So now I can again look at some hourly liquidity and say, okay, where are we going? Right? Look at 9 a.m. candle. Where are we going? Well, we're rejecting the previous day high. We have SMT. 9 a.m. closes here. I'm potentially framing a 10 a.m. continuation. Into what? We have to find some liquidity. I mean, there is this low, previous day low. And then, of course, like we said, we have 50% of the wick, right? Which may offer some support. I'm also going to notice we're in this hourly imbalance. And again, this is a very tough day to trade because you can see we did not get a manipulation with SMT at 8. We did not get a manipulation with SMT at 8. 9 a.m. opens and immediately trades lower. The only thing I can do is consider a C2 at 10, which must be a reversal. Nothing's interesting here at 9:45. 10 a.m. immediately trades lower. Right now our eyes drawing on the previous day low. We come into our key level here. And look at the hourly chart. Come into our key level here that we have marked out from our daily chart. And the only thing I can trade at 10 a.m., guys, is a reversal from a key level with SMT. Because I'm not trading 8 a.m. 9 a.m. does not form a manipulation, a C2 candle. Right? There's no C2 formed at 9 a.m. So I must trade a 10 a.m. reversal if it's offered. So here is my key level, fair value gap, 50% of the previous day. I need to see if divergence forms inside of this level. And I will do that on a 5-minute chart. I will mark out the lows. You can do it on a 15-minute chart too, actually. Here's my liquidity at my key daily level. Okay, I see a divergence forming in there. 10 a.m. must be traded as a reversal candle for my model. So I am now going to target, if I trade a reversal, 50% of this range. Any liquidity that rests at 50% of this range is going to be a viable objective for me to target. Onto the 5-minute chart. So here is my SMT. I'm going to get rid of the 50% mark. You can just see the line. Okay, this in here is my SMT, this line, just like today at 10 a.m. Very, very similar setup, actually, to today at 10 a.m., where we get this kind of move before. Except because we have an SMT at the high of the day, I'm not going to be targeting the high of the day. I am trading a retracement of this 10 a.m. candle back into the range if it forms. So what I need to see is a change in the state of delivery, right? Or an inversion fair value gap. So let's wait till 10 provides one of those two frameworks. In here, I can see both of those occur. Inversion fair value gap right in here and right in here. ES actually offers the inversion fair value gap in this candle. So you would take the closure of it or the retest. Again, the SysD level is not until up here. So if I'm waiting for a 5-minute SysD, guys, I'm not going to get it until all the way up here. That's my objective. I want to target this liquidity in the market. So I'm going to be using the inversion as my entry on the 5-minute because the SysD level is not until all the way up here, which I'm targeting. And then, of course, we're targeting this liquidity or 2R. Okay. There we go. We get that. So both ES and NASDAQ both offer that inversion entry, right? NASDAQ does not retest. ES does right here. So you have to choose your entry technique in here. You also can use this higher inversion, but I wouldn't, because my objective is simply the first premium pool of liquidity in the market up here. Essentially, this is your drawn liquidity. So you can position yourself as a 10 a.m. reversal to that high using my model and the logic, right? That 10 a.m. will be a reversal candle. If we have no manipulation at 8 or 9, so 10 is going to manipulate with SMT and form that. There's your 2-hour trade. You take it on ES due to the strength. And then the rest of the day, you just allow it play out. You don't trade after 10 a.m. regardless. As you can see, it's a complete chop fest, right? Oh, look at the end of the day. If you hold some runners, right, maybe you juice some EV. Again, for me, I'd be trading just towards this high at 2.4R. Okay, so that's a 2-hour day right there. And you can see 10 a.m. is the low of the day. That logic, just like today, applies where you get that manipulation into 10 a.m., right? Significant divergence at a key level. And we've had no manipulation of the 8 or 9 a.m. candles with SMT. That's why my model works, because we're using session manipulation to frame our entries. Cool, let's do the next bit. So again, you can see previous day high is actually taken. Again, let's see where the candle closes. Right here. So again, like I said, the logic that we don't create a new high of the day stands, because this high of the day had our framework for high of the day. SMT, right? In the key level. Where is it? So that high of the day holds. Let's do the next step. So far on this week, we lost one trade on Monday. We took no trade on Tuesday, and we're up to our, here, we're up in our this week. Nice. The logic is going to be the same thing for this next daily candle. What do I want to mark out? Well, you can see on this day, we wick above and close below. So some might be saying, oh, well, this is bearish. But for me, I'm not going to short a candle that looks like this. So what I want to see is if this part of the candle can support price higher based on the close. So I'm going to mark out the previous day low, equilibrium of the previous candle, and the previous day high. Again, failure swing to this, which we could say might be our draw, or we can say this is our premium imbalance. Cool. Same exact logic. Let's go down to the lower time frames and see what happens in the overnight session. So we have two levels: previous day high, wick, equilibrium, previous day low. I'm not anticipating previous day low be traded to unless we start to get disrespect of these PD arrays in here. What do I see in here? Hourly order block, and we'll see what the overnight session prints. Okay, so immediately I'm noticing we're respecting this wick equilibrium. That's nice, but I still have 3 hours until I have to consider anything. So I'm going to allow London to print. Okay. By now, my draw is previous day high. If I was at my computer at 6 a.m., I want to target previous day high because I'm seeing the reaction here. And more importantly, I'm seeing a framework for low of the day. Remember, we're doing the same exact thing every day, guys. SMT at key level, low of day, divergence, right? In here. So there's the key level. This hourly swing point. Both indices take out that hourly swing point, and we form a divergence in this swing low below that swing point. Okay, like that. Fantastic. 6 a.m. prints. Let's see what 7 a.m. does. Okay, 7 a.m. expands to previous day high on ES. Now what am I thinking? I'm thinking gross. Because I've already taken out my draw. I have SMT forming on the highs and lows. Immediately for this session now, I'm thinking, it's not as good. Like, it's not as good because I don't have anything to trade towards because I've taken out the previous day high on ES and I have SMT on both sides of the market, and it's not even 8 a.m. yet. So again, the information offered by the two previous sessions helps me, but let's keep looking. Oh, that's nice. Okay, I get a strong closure at 8 a.m. Again, I'm looking at this premium imbalance. There's nothing for me to trade here at 8. I'm not chasing it at 9 either. 9 a.m. I could trade a reversal from this premium imbalance again. 9 a.m. I could only trade a reversal if we came into the premium imbalance or we formed SMT in this leg. That's the only thing I can consider, okay? So 8 a.m. prints. I'm going to mark out my hourly liquidity above the previous day high because that's where SMT needs to form, guys. Mark out your hourly liquidity. And then, of course, I have my premium imbalance in here. So I'm just watching. Let's go down to a 15-minute chart. Now we're saying, algorithmically, did 8 a.m. reverse? No. Good. Do nothing. Did 9 a.m. reverse? But we have no idea. So wait and see if it does. You see, there's only a couple of if-then statements. If 8 reverses, trade 9 is a continuation. If 9 reverses, trade 9 is a reversal. If 10 reverses, trade 10 is a reversal. We're utilizing session volatility in the kill zone to find a reversal candle to trade with good RR in the direction of our daily draw. All of these things matter. So here are my liquidity objectives, all marked out on the hourly chart, okay? Previous day high. And every single hourly liquidity objective that price could potentially reverse from as a failure swing to that previous day high. Fantastic. This one they both take, so I'm not going to mark it out, but this one, only ES is taken by 8 a.m.'s close. Did 8 a.m. reverse? No, 8 a.m. did not reverse. Why? Because the consecutive series of opposing candles into the key level with SMT is there. 8 a.m. did not reverse, so wait for 9 to reverse. Oh, there we go. 9 a.m. reverses. I can clearly see that. I accidentally played out one too many candles. You wouldn't get a fill on this day anyways, potentially. Let's see. So now I can see that here are my SMT levels. Here's H1 liquidity above previous day high, which was the draw. And now I can say, did 9 a.m. reverse? Yes, 9 a.m. did reverse because the consecutive series of opposing candles into the key level with divergence has been closed through. Okay. Here are all up close candles on ES right in here. That is closed through into the H1 ERL. Why aren't I using these candles for NASDAQ? Because NASDAQ makes a higher high and creates another divergence. That's still below here. Remember, still below the SMT level. This is what I characterize a reversal as. Perfect. Okay, another sweep. Right? Above that key level, previous day high, SMT failure swing. ES gives a reversal. I'm not shorting this candle though. So what I would do is I'd wait for a retest on ES, or I'd wait for a retest on NAS. And then I'd target, well, like I said, I would target either previous day low or any liquidity objectives that are failure swings to that. So for me, if I go to a 50-minute chart, I can target any of these swing lows in here or the London lows, recognizing there's SMT there. So maybe I don't want to target all the way down there. Maybe I just target here. Maybe if I look at my hourly chart, guys, I target this fair value gap. That's 2R. As you notice, I don't get a retest. So what does price do? Goodbye. Right? It goes without me, and that's okay. I don't get a trade. Unfortunately, I did not get a trade here. And that's fine. We had the right idea. Our model printed. It gave us 2R, but it did not retest. So now I'm thinking, okay, so 9 a.m. reversed. Remember, if 9 a.m. reverses, what will 10 a.m. do? 10 a.m. can only do one thing. Continue, retrace, reverse. When is it going to continue? If the draw is not met, retrace, right? If the draw is not met, this is like retrace into expand, a reverse, if the draw is met. So it's a pretty simple algorithm, once again, of what 10 a.m. will do. So I'll wait for 10 and see what happens by 10 a.m. Here's 9:45. Where is 10? Okay. Look at the hourly landscape at 10 a.m.'s open. What do I see? Well, I see we've come above previous day high and 9 a.m. has reversed. I can say that. Has the draw been met? Well, I can say that inside of these PD arrays, am I being offered support? No. We have a closure through this hourly fair value gap, right? and it seems pretty weak on NASDAQ. It's a strong bearish close. So I can say that potentially the draw has not been met, and I can trade 10 a.m. as a continuation from previous day high, potentially into previous day low. And I can zoom out, and I can say, what key levels am I going to be targeting? Right here on this 4-hour chart, it looks absolutely disgusting, as you can see. All I have as a key level here is previous day low for a continuation, but I also have this previous 4-hour swing point. I'll mark that out as well. There we go. That would be the trade thesis for 10 a.m. Let's go down to a lower time frame chart and see what happens. If I'm trading a continuation, if you've seen my Primo video, you know I use M15 M3 or M15 M1. That's the same exact continuation protocol I use every single time. Again, we're going to remove as many decisions that we have to make manually, and we're going to try and integrate it into these rules that we use. We're waiting for a 15-minute M3 continuation because it is a C3 candle. Okay, the draw has not been met. We have a lower draw on liquidity below market price. These London lows are a draw, and previous day low is another draw on liquidity for us. I'm waiting for a 15-minute array to be engaged. I can see that as 10 a.m. opens, go to 10 a.m., right? We have come below the London lows. Look at 10. It opens and trades into the London lows with SMT. So now I can ask myself, has the draw been met? Well, this was one of my draws. And do I have SMT there? Yes and yes, right? I can trade 10 a.m. as a reversal candle on the hourly chart. Let me go back so I don't cheat. If we come into some lows, we can trade 10 a.m. as a reversal back into the range, or we can trade 10 a.m. as a continuation. So what I'm going to wait for is 10 a.m. to open. Okay, takes out this low. I'm seeing the SMT divergence form. That would be my change in state. But again, do we have SMT at a higher time frame level for the daily candle? Yes, we do. So what am I going to target? Same as before. For a 10 a.m. reversal with SMT at the highs, I want to be targeting this liquidity. So I'm not going to use this as my change in state of delivery. It doesn't make sense to do that because that should be my objective. I'm going to scale down a time frame. Okay. So the minute this candle closes, you can see I can now look maybe to target this as a retracement objective. There's a 1-hour fair value gap in here that we might print at the end of the 10 a.m. candle. And there's a 15-minute gap in the market price right here. Okay. So what I can say is that if the draw has been met here with SMT and I get a significant change in state of delivery, I can long this here. Now, in this case, this is a 10 a.m. just ripper. So what I want to do is scale it down and say, okay, what can I actually trade here? Mark out this fair value gap. That fair value gap on ES2. And there's also a 3-minute fair value gap in here. I'm going to see if price wants to draw into the lower one. I need to have a decent risk to reward, guys. I can't really long up here for that high if that's my draw. Nice. Okay. So I'm watching this fair value gap. Nothing is offered inside this fair value gap in terms of lower time frame alignment. Okay. We're just tearing through that fair value gap. I'm obviously not going to long this. I'm waiting, like you know, for an opposing run. Okay. Nothing's offered at 10 a.m. long. There we go. By simple nature of saying, I am waiting to see if we get a retracement into expansion. We don't get that. So we get a continuation and no trades for me because I think we're probably going to take out the previous day low, right? 10 a.m. doesn't come into the fair value gap. It stays heavy and we trade lower, right? I'm not going to trade it, right? For me, there's nothing in here. By this point in time in here, you can see we don't form. Actually, we do. Shit. Okay, we do. We form another SMT to London lows. I thought ES took it. Okay, so if ES takes out this low, I'm done. Okay? If ES takes out this low, there's no SMT at the London lows and I can't trade long. I'm expecting the previous day low. In this case, as you can see, ES doesn't take out the low. So sorry, I cheated. My bad, guys. I cheated. But again, it's the same algorithm, even though I know what happens after. It's the same exact logic, right? If we have a C2 form with SMT, we trade back into premium of the range. Simple as that, right? Especially if we have SMT at the high of the day. So we're just watching. 10 a.m. does not provide a reversal in here. I'm going to wait for my change of state delivery pattern, like you always know I use to get involved in trade. Okay? So then again, we put a low in here, still have the SMT, the 3-minute SISTs here. Look at the 5-minute. The 5-minute SISTs up here. Again, I'm trading to these highs. So I'm going to scale down a time frame, guys. Here's an inversion fair value gap. Again, I need to see price close through it. No, nothing yet. Look at I'm watching my 3 and my 5-minute right together. And again, any invalidation of here, like this low is taken. Okay, simple as that. Remember, we have these levels because we're continuing to expect a reversal unless that low is taken. If that low is taken, then we're saying it's a continuation to previous day low. But I'm only trading 9 or 10. In this case, 9 and 10 is giving me this reversal signature. Okay, waiting for that inversion fair value gap to form. You can use a 3-minute, you can use a 5-minute. I prefer to use the 5-minute, so I'll use the 5-minute. Some of my students use a 3-minute. Again, if you're on side, it's going to matter a lot less. Okay, so in here, what you can do is you can take the retest of this fair value gap or this 3-minute inversion, covering just the low and targeting, like we said, here. You can take that trade if you want, or you can wait for the 5-minute retest. I don't know what's going to happen, actually. Okay, so it doesn't offer a retest the 5-minute, and it delivers. So the only entry you would be offered, right, for this specific 10 a.m. reversal is this 3-minute in here, retest. Again, if it doesn't fit your risk, guys, to risk 100 points, then you put your entry at the retest of here and you don't get filled. And it's not the end of the world, okay? And as you can see, ES eventually reaches up into our premium imbalance, right? So you get eventually, that higher time frame level delivered as well. If you want, you can trade past 10. I don't. This would be the only entry I would take. And personally, guys, I wouldn't get filled on this day. I would probably have my limit right here. I'd be waiting for the retest, and it would just go without me, right? It would just fail to come back and tag me in, and it would just go. But there would be your trade. Okay, so I hope you're seeing there's only a couple of things we're doing each day, and each day is one of 3 situations, right, for our model. So next step. This is good. It's always nice to backtest like this. Yeah, on this daily candle closure, what am I seeing? Previous day high and previous day low. What do I notice we've come into? A premium imbalance that I had marked out before. This is a bearish fair value gap. I'll mark that out as well. What does ES do? Closes above. That's a continuation pattern, guys. I am now looking for ES to take out its previous day high. NASDAQ wicks above, puts in a failure swing to this imbalance, and closes below. NASDAQ is weaker than ES. I know that already, so I'm expecting NASDAQ to potentially not take out its previous day high. NASDAQ could come in to, again, in all cases, I'm going to mark out something like this, discount of this wick. Okay, my draw for ES previous day high. NASDAQ, less convinced. It's more bearish. Go to the hourly chart. It's also Thursday, a very high probability reversal day in the market, right? Let's go back to the 4-hour chart. Look at the weekly profile so far. We've had Monday, or Tuesday, I guess, put in a low here with not great SMT actually at this low. And then we've chopped up all week. I'm considering the fact this weekly candle could reverse here, right? Especially given this divergence. But I'm just going to see what happens at the previous day high first, because that's what I want to see ES draw into. Yeah. Wait for the New York session to open. 6 a.m. 7 a.m. Let 8 a.m. print. Cool. What is the lay of the land, guys? Okay. So right now, let me make this a little bit less bright. Coming into the New York session, what am I studying here? I'm studying ES has a draw of the previous day high. NASDAQ, I don't expect to hit the previous day high or be anywhere near as strong. I want to trade ES in the direction of the previous day high. I have equal lows here. One tick sweep, right? At London's low, do I have any meaningful SMT on the daily candle? No, I don't, right? There's no SMT that's meaningful below these lows. So I'm thinking that potentially we might want to create that SMT, and NASDAQ is weaker. So into the New York session, I'm thinking, here's my liquidity. There and up here. These are the two pools of liquidity of the market. Does 8 a.m. reverse is the question I have. Right? Did 8 a.m. reverse in any significant way? Well, let's see. We have a fair value gap in here, right? Let's see what happens on the lower time frames. Do we come above any of these highs with SMT? No, we don't. Okay, none of those highs come with SMT. 8 a.m. did not reverse. 15-minute chart. Let's play out 9 a.m. Right. So I'm not trading 8 a.m. I'm not trading 9 a.m. until 9 a.m. reverses potentially. Right. Did 9 a.m. reverse? Don't see anything of interest yet. Right. Look at the hourly chart. Let me go back and mark out my hourly lows again. That form after 8. I see an hourly FVG in here. Let me just mark that out. Because again, this is my lows. This is my high. These are my lows. This is my high. That's the range, the dealing range of where price can trade into. I have two inefficiencies on the NASDAQ or on the ES that we can potentially trade into. So I'm just going to mark those out before 9 a.m. 8 a.m. did not reverse. My draw on liquidity is previous day high for ES and potentially lower for NASDAQ. I have a mixed bias. Okay, wait for 9 a.m. We come into the fair value gap on either? Nope. We don't come into the fair value gap here. We do come into a fair value gap on NASDAQ. Here, small one. Cool. That's this fair value gap right in here. You guys can see on these higher time frame candles. I'm looking for a changes day of delivery, right? And SMT. A consecutive series of opposing candles into the key level with my divergence, which is this low. That is my divergence right in here. Fair value gap is created. Do you guys see that? Okay, that's my SMT. That's the fair value gap. There's my changes day of delivery. ES actually offers a retest. ES is the index you want to be longing, not NASDAQ, because like we said, NASDAQ is weaker, ES is stronger. Your target is previous day high. This is an hourly M5. You want to risk the low and see if it delivers previous day high. Perfect. Look what happens. Again, exactly like we anticipate, ES takes out the previous day high, which our draw is for ES take out previous day high. NASDAQ fails to take out previous day high and then comes back in, sweeps all these lows. ES holds above them. That's good. We're done at 9 a.m., right? So by the time we take this trade, we wouldn't even take 4R, guys. You're just going to take 2R, right? You're going to take these Asian highs, these London highs, whatever. You might, if you want, you can hold a runner to previous day high and you're done. And then again, what do you expect to see, right? NASDAQ weakness. Look what happens. Let's see if NASDAQ ends up taking out previous day low. I'm interested. So again, you wouldn't be trading this after this trade because it's just a chop fest and you already took your trade. But you can see the clear weakness on NASDAQ. I'm interested to see if previous day high is taken. Nope, NASDAQ does not take previous day high. So again, our daily bias holds up very well here, right? So when we go back and we review this, we said ES to PDH, right? NASDAQ is weaker. and QSMT at PDH is the likely daily outcome, and that's exactly what happens. So again, we're just trading alongside of that, using our model to get involved in a distribution towards one of our draws, either NASDAQ's lows or ES's highs. And as you can see, the only candle that offers a C2 reversal at 9 or 10 is right in here. Okay, right in here. We have a small fair value gap right in here. We have an SMT divergence, 5-minute change in state, delivery to previous day high. So that is your H1M5 realignment. Really, really nice on that day. Okay, let's do the Friday. This is Thursday. Get rid of all this. Get rid of all this. Or was that the Friday? That might have been the Friday. I think that was the Friday. That was the Friday. Okay, let's do the next week. Okay, so that was that week. Anyone want to pick another week? We'll do one more. This is good. So that week you had 2 winning trades, you had 1 losing trade, and you had 1 day where you did not trade. So you were up about 4R at the end of the week if you do it perfectly, right? And if you won't do it perfectly, obviously, you're going to make a lot of mistakes. But if you do it perfectly, you're up 4R. Give me a hard week. Give me something that you guys, give me anything that's going to be hard. The way I determine my daily bias is exactly the same. Internal range liquidity, external range liquidity, candle body closures. Right? December 13th. Can we not do Christmas? Let's do any time besides Christmas. Christmas sucks, guys. I'm not going to trade that Christmas week. July 4th, 2024. All right, let's do 4th of July, baby. 1 week. July 2024. Let's do it. Okay. You guys want me to backtest Christmas? That should be criminal, like trading during the holidays. I remember trying to do it. It was hard. Okay. Let's do the exact same analysis we always do. How was the gym? Good. Okay. Oh, this is the previous week, right? The week of June 24th. What we're going to mark out is the weekly dynamics that we observed. I see a weekly internal range of liquidity. What else do I see at this weekly internal range of liquidity? I see a divergence. Perfect. Looking left, I have no other things to look at. This is all-time highs, baby. So what do we expect? All-time highs, create all-time highs, create all-time highs. So I'm bullish. It's pretty simple for me because now I have a thesis to expect a continuation. Internal range of liquidity, right? SMT. I'm going to mark out the external high, which is going to be all-time high on both indices. I'm also going to mark out the previous week high. And the previous week low. Again, I'm marking out the previous week low just so I can see it in context of where we're trading in case price wants to come in and maybe engage this IRL once again on a lower time frame like daily chart before we go higher. Okay, perfect. This is Friday's close. What is telling about Friday's close? Well, what I can see is that we have a range. We have swept out the range low here. The candle that we're looking at Friday did this. It opened, formed a high, did not take out the all-time high, formed a low, and then closed. So for me, the liquidation of these equal lows is very telling about what I want to see potentially for the next week. So these are the lows. Again, I'm going to make this box very, very not so bright so we don't have to see it all over our charts. Monday, I'm anticipating to be an accumulation day in the market or to take out potentially this low. So I'm going to mark out the previous day low on NASDAQ. Okay. And on ES. There we go. Mark it out. Previous day low, which is also previous week low here. Again, you can see how messy this Monday is going to be just based on how tight this range is. I'm also going to mark out 50% of this wick because if we're going to form a high, I believe it's going to be somewhere in here. There we go. Perfect. Let's see how Monday prints. Okay, we take out previous day low with SMT. 7 a.m. pushes back up into the range. 8 a.m. consolidates. What do I have as the state of the union coming into the New York AM session? I have an SMT at previous day low, okay? So PDL SMT right in here. I have all of this liquidity in here and the previous day high potentially. It's a Monday, I'm not expecting a huge move. So let's just let that sit, okay? Right now, realistically, nothing looks that amazing in here besides SMT at previous day low. Has 8 a.m. done any manipulation? Let's see. We have a fair value gap. Did we reverse from this fair value gap is our question. Let's see. No, we did not reverse from the fair value gap. I have not got a SysD here. So 8 a.m. did not reverse. Cool. Wait for 9. Nice. 9 a.m. comes in, sweeps out this low again, also into this fair value gap. Let's keep that on our chart. Okay. 9 a.m. hasn't reversed yet. Oh, nice. Okay, so what do I see in here? We have equal lows inside the fair value gap, our key level. And in addition to having equal lows in the key level, which forms an SMT divergence, we have relative equal lows. It's one tick sweep. ES comes below here, puts in these equal lows. We have a very strong change in state of delivery on the ES. 15-minute change in state of delivery. Let's use our protraction profiles now, guys. Do we have SMT at the low of the day? Yes. Do we have SMT at the high of the day? No. I want to trade towards the side of the market that does not have a protected low, especially if we're in a range. So what's my draw on liquidity? These highs. The first draw on liquidity, right? And then maybe I want to target some premium liquidity of the market up here, right? All of this is premium liquidity. The dealing range, right? From here to here, anything in discount or premium rather, I can look for. Cool. 5-minute change in state of delivery. Wait for the retest. Cover the rejection block low. 2R is above the London highs. Oh, let's see if we got stopped out. Stopped out. There you go. So we have another run on previous day low in here. Good model, good entry, good stop loss. 1R loss. Okay. Again, let's see what the rest of the day does out of curiosity. So we take previous day low once, take it again. Right. Just a consolidation day. Let's see if we eventually come up into these highs out of curiosity. There we go. So eventually we do come in there. We just need 2 stop hunts, which kind of sucks because it's just a seek and destroy type of day. But that happens and you take your loss because that's what your model tells you to do. You take a 1R loss. So what do we notice? 2 Mondays in a row, 1R loss, right? Maybe Monday is not the best for trading expansions. We know that already. Okay, let's go to the next day. All right, accumulation day of the market. Came in. We ended up sweeping out that low we talked about. So now we have previous day high. Previous day high. We had a closure, sweep of previous day low and a closure back in the range. Our eye draws to the previous day high, right? As well as 50% of this wick. Same as before. Do we have any SMTs forming at the low? Yeah, we do. We have an SMT forming below the previous weekly low. Fantastic. Mark that out as well. Good. I have a clear bullish bias for Tuesday. So if you let Monday print, you don't take a loss there. You just let Monday print. And then you can see you have a clear bullish bias for Tuesday. Okay, cool. I'm also going to mark out, as always, 50% of this wick because if I'm expecting a swing point to form, I want to see this part of the wick support price higher. Wait for the session open. Drag my SMT properly. Five a.m., 6 a.m., 7 a.m. Nice. I got a sweep of the previous day low. Nasdaq's definitely stronger here. Previous day low. Okay, let's see. 8 a.m. Okay. No sweep at 8 a.m. The sweep was at 7 a.m. Nothing to do at 8 a.m. Just wait. So again, what we're looking for is previous day high, and we have an SMT forming at the previous day low and the previous week low now. So we have higher time frame SMT forming on these indices at two higher time frame levels. Again, we're looking for previous day high, this consolidation essentially, these relative equal highs on Nasdaq, right? Cool. 8 a.m. does not form a sweep of any key level, so we're waiting for 9 a.m. Let's go to a 15-minute chart and wait for that. 9 a.m. pushes up. There we go, and 9:30 opens and takes out the high. So in this case, because it was not 8 a.m. that swept, it was 7 a.m., we don't have a trade idea at 9 a.m. to previous day high. That's fine. We just wait. So 9 a.m. takes out the high. Now we're saying, okay, if the draw has been met, we can frame a 10 a.m. reversal or retracement. If the draw hasn't been met, we can frame a 10 a.m. continuation. If I'm going to frame a retracement or reversal, I need to see the following. SMT, key level, ST. Well, ES looks a bit weaker, so let's wait for 10 a.m. and see if this previous day high SMT holds. Go to a 50-minute chart. Okay, so I have a fair value gap in here. If price is going to continue at 10 a.m., it's going to respect this fair value gap. It's going to reverse, it's going to disrespect this fair value gap. So I'm considering if we're going to get a reversal or a continuation. 10 a.m. opens, engages the fair value gap right in here. Do I have any SMT? Okay, watching to see if I can get a SST. This candle, I want to see a SST on. Nice. We retest that chain to stay at delivery, close above. Enter on the candle closure here. You could just risk that 10 a.m. low if you wanted. Right, this low that formed here, you could risk that. Or you could risk the entire low. I'd probably just risk this low. Targeting that next draw on liquidity. All right, let's see. Yeah, so you can see, right? This 50% is the only target I have, right? That's a continuation target. So the 50-minute gap got respected. Therefore, I'm not framing a reversal because I said if we have the 50-minute gap being respected, then we're going to see a continuation of order flow. Just frame that. Take your entry once you have a confirmed low with SMT in the 50-minute gap, right? There's your SMT. There's the low. There's the change in state. Enter on the retest or enter on the closure. It's up to you. I like to see this closure through more. That's the 5-minute order block. I want to see that. All right. So risk. That's okay. Risk the low and then target that 50%. And stop dots. And maybe it goes after. Right. Again, tough. Right. Let's see if it delivers. It delivers, right? So this is just one of those times where if you get stopped out, you might take another entry. Like for me, the thesis has not changed at all. So if you take your stop out here, right, with that high resistance run, it's because we didn't cover the 10 a.m. low. Or we did. We covered this low. We had this chain to stay delivery and offered another stop hunt right here, okay? When it offers that secondary stop hunt, you can say I'm the one and done. But for me, is today I just take another trade with the exact same idea in mind, right? 50-minute gap gets respected once again. We get another 3-minute chain to stay delivery. Do I have SMT that forms? Let me check. Nothing actually great with SMT here. Maybe I wouldn't take a reentry. Yeah, maybe this is another stop on. Unfortunately, it's not a stop on, guys. Okay, so this would be your 3 minute SSD, but there's no SMT here. You could take a reentry. I wouldn't. Same exact stop loss as before, right? The lows. I'd want to see SMT at these lows. Maybe I'm not seeing it, but I don't see any SMT in here. So it's not as good, but I'd still be targeting there. And then you get it, right? Interesting. That sucks, right? Sometimes you get stopped out again. It's a pretty tight stop, and that happens. And then you deliver to that 0.5. Let's see how the rest of the day plays out if we actually deliver previous week high as well. That's the next draw, right? Nope, no, didn't take previous week high. So we'll go to the next daily candle. Okay. So do you guys see that? Like in here, you just take a stop out. Like I hope everyone can see that. Like in here is just kind of unfortunate because you get a realignment based on the 15-minute. I'm going to be very honest. I don't think I'd take a reentry because there's no SMT again. And I don't trade after 10. But this one's just a little bit unfortunate because look, it comes in, it forms a nice SMT in that fair value gap right here. Right there. It forms the sweep. Then we get the closure. And then we get stopped out. And then it goes. So this is just a little bit of seek and destroy. The way to avoid that, in my opinion, is to cover more of the fair value gap, which I just wouldn't do. That's just me lying if I'm saying I'm going to do that. So yeah, I would get stopped out here. And it is what it is. So -1R. If you take the reentry, or if you don't get stopped out, you deliver all the way to your draw, right? This 50% mark. Let's do the next step. You're seeing it. It's very realistic, actually. Like 4 to 5 hour weeks, right? Sometimes you have an overperforming week. Sometimes you get unlucky and get stopped out a few more times than you want to. Previous. Okay, see ya. There's some food in left. Sounds good, bro. Okay. Previous day high is a draw on liquidity. For this day, it's also the previous week high, right? So now we have the next day as obvious draws on liquidities, previous day high, previous week high, and all-time high. Now I'm not considering the lows anymore. I won't even mark out the previous day low, really, because I know we have divergence at the previous week low, SMT at the previous week low. Then I have a stop hunt of this daily candle right here. This is all aligned for me to expect expansion now for the rest of the week. So I'm going to be trading with that expansion in mind. Okay. So I'm expecting Wednesday to trade higher into the range. Where could it retrace to? 50%. 50%. There we go. All my key levels are done. We'll wait for the session open. Okay, we take out the previous week high here on ES. Previous day high has been taken on NASDAQ. So we have SMT forming at these highs. I'm still bullish, though. I wouldn't be looking to trade short. What I will mark out is 50% of this range like we have right here. And I'll drag that right to here. So any of these P arrays in here are interested if we want to reverse and retrace those. 8 a.m. Nice. So 8 a.m. is coming back into the range. No reversal, obviously, at 8 a.m. I can see that. So I'm going to wait for 9 a.m. 8 a.m. did not reverse. I'm coming into all my hourly key levels. See, 9 a.m. needs to perform an SMT with a key level for me to trade. Seek and destroy on the open, and okay, so equities open gives you a rocket. Who picked this week? This one's not fun at all. Okay, so look at the hourly chart. We come in below these lows here. We don't come into the fair value gap. We come into these lows, and then we have a massive 930 rocket. So for me at this point, I'm going to be trading a 10 a.m. continuation, right? So now it's saying 9 a.m. reverses. 10 a.m. should continue. Right? The draw is higher in the market, right? All-time high potentially. So we'll wait for 10 a.m. Unless it wants to fill me out like here. This is your change of state delivery level. I actually do get an entry. Not bad. Again, why is this the change of state delivery level? What are the consecutive series of opposing candles into this low? So you're looking at this price leg, guys. The series in this price leg into that liquidity is your SMT, okay? So we don't come into the gap. So it does not the candles into this gap, it's the candles into this low. That's the SMT low. It's these candles. Actually, no, it's these candles in here. You can see that, right? This candle here takes out the low. You can see all of these candles are below that Asian low. So what you can see is that you actually have these candles, all of them. So I'd be waiting to trade 10 a.m. continuation in this case, right? Here's our 15-minute SSD. $9.45. Nice. So you can see we're really respecting that 15-minute SSD level. I'm looking at trade 10 a.m. continuation, right? So any reaction from this 15-minute change of state delivery level in here. Yeah, 3-minute. Where's 10 a.m. open? All right, 10. Okay, so 10, there must be news here at 10. Draw is still going to be, for me, higher. Right, there's no other liquidity in the market to the left that I can see as potentially being a roadblock. So it's just going to be 10 a.m. as a pure continuation trade. I have my 15-minute PD array marked out at 10. Order block and FVG. I wouldn't take the 9 o'clock entry here, guys, simply because I don't want to get filled out at this high, because then my stop loss is going to be crazy. Well, for the range, right? Yeah, that's too big of a stop loss. I would much rather wait for 10 a.m., wait for that 15-minute array, which we have in here, wait for an SMT to form and trade the continuation. There we go. So here's the SMT, like that. Mark that out like there, there. Reversal happens right here. Continuation is 10 a.m. coming into this 15-minute array. You can see it right here. If I go down a time frame, 10 a.m. opens, comes into this 15-minute fair value gap, into the 15-minute order block, forms an SMT divergence at the lows. And now I'm waiting for this change of state delivery. ES just gave it to you here. Right? NASDAQ stronger, so I'll take NASDAQ. Waiting for the change of state delivery to form. Perfect. Change in state. Right? I'm going to be longing here. And I guess your only objective is all-time highs. But I guess 2 hour. And you can either cover the 10 a.m. low, and then you can really, really extend your TP, or you can cover that SMT level, right? Like in here. Now, technically, the stop loss is the 10 a.m. low. Let's see. There you go. Right? So you want to cover the true invalidation, which is the 10 a.m. low, and you get your 2R. So it's not bad. So here you have two options to get involved. You can take the 5-minute reversal candle right here, change of state delivery, consecutive series of opposing candles into the key level with SMT. This sequence of candles, you're going to enter here, and you're going to risk the low, and you're going to target the high. Or you're going to do the same thing at 10, and both ways it's roughly the same RR, guys, right? 2.4 versus 2.1. It's completely up to you. Just make sure you cover the low, because this is the true invalidation, and sometimes you'll see me do this, which is something that's problematic for my trading as well. And I'll jack my stop up a bit, and it shouldn't be there. It's just to get better R. It should be here. So this is a day where you get 2R no matter how you slice it, right? So nice. Very nice reversal entry. C2 entry. Again, what's the framework for C2? H1, M5, right? You have an H1 key level. What is that key level, guys? We already defined it, right? I'm going to go back to the hourly chart so we can really paint this example very clearly. Key level, hourly swing point, okay? There's also a 4-hour fair value gap. So it's a 4-hour swing point, a 4-hour fair value gap, and an hourly swing point. Now we go into the 5-minute chart. 5-minute change of state delivery, that's your entry. Cover the low of C2. That's your C2 criteria. Here is a continuation entry. M15 key level, M3, SMT plus SysB, right? Cover the low of C3. I also missed SMT, of course, guys, on C2. We must always have SMT. Okay, so this is the two frameworks. C3 is that continuation, 50-minute array. C2 is that hourly M5 reversal. And if you actually look at the hourly candles, you're going to see that's exactly like what you're seeing. It's what you're observing with the hourly candles, right? Let me get rid of all this. Reversal. Reversal right in here at 9 a.m. Continuation at 10 a.m., right? You're pairing this order block here, which actually overlaps with the 15-minute level that you care about, order block for value gap, as a continuation of this reversal. And then 11 a.m., you're going to see something similar, okay? Look at 11 a.m. In this wick, if you were trading at 11 a.m., how would you get involved? You're waiting for a M15, M3. Let's see if that is offered. Let's look at 11 a.m.'s open. Or the close of 10:45 to 11. The macro is also permissible. Look at that. 11 a.m. comes into the order block on ES. Remember which one's stronger? It's NASDAQ. So NASDAQ's going to make higher lows. ES rebalances the order block. What do we notice in this wick? SMT inside, right there. It's a beautiful example of a continuation. You're trading the continuation of order flow. M15 order block, M3 SMT SysD. Look, here's your M3 SMT SysD. Okay. M3 SMT SysD. Okay. Changes day of delivery as an entry function. Consecutive series of opposing candles. And here you can see it doesn't even come back and tag you in, right? So in this case, you have to see again, changes day delivery is on ES. So I'm always looking at both. ES engages the SysD level. Zoom, zoom, zoom. Right here. As ES taps that SysD, that's where you take your NASDAQ long. So whenever that wick, whatever time this taps, take it on NASDAQ. Or take it on the close. Doesn't really matter, but take it on NASDAQ because NASDAQ's stronger. Invalidation here, TP, there, or 2R. And this is where you can start to use your standard deviation projections from these legs. Manipulation as a continuation, 2 deviations, 2.5 deviations potentially, right? Maybe even 4 deviations if it displaces past 2.5. Right? And then look how these levels are overlapped. So that's the continuation at 10. Here's the continuation, or 11. Here's the continuation at 10. We said right in here. Okay, 2.5 deviations for that trade. Then here's the reversal at 9. So this is a continuation leg. This is a continuation leg. Here's a reversal leg at 9. Where is that 5-minute SysD I marked out? Right here. Okay. All right. This manipulation leg is all one move. So you can see some overlapping levels. 2.5, 2.5, 2.5. It's a really nice area to take some partials at because all aligning with all-time high, right? And then you can see, right, high of the day is formed at this fourth deviation. This is where deviations are cool because you have overlapping deviations. Then you can use them for like the main range, which is like this reversal, and then each continuation leg after it. Anyway, so that day you probably make 2R at least, right? So that's a really good day in the market, right? You get a nice follow through of exactly what you're expecting, and you get multiple chances to align yourself, whether you want to trade the reversal or the continuation. Now, for me, where's my hard cutoff, guys? It's right here, 10 a.m. I'm not trading 11 a.m. continuation, 12, 1, 2, not doing that. Okay, so both indices take out all-time high. Let's go to the daily chart, and now let's see what happens on the next day. So this is Wednesday. We have no other look but continuing to trade long because we're at all-time highs. So all-time highs, create all-time highs, create all-time highs. So we're assuming a classic expansion week. Yeah, demanding the stop loss as a protected low is like important. I agree. You can cheat, and I do cheat sometimes, and then I get stopped out, and I recognize why when I cheat it's problematic. Yep. It just you have to demand a greater conviction in your like objectives. Like if you're trading counter trend and you really don't think you're gonna get like a solid risk to reward with covering the true invalidation, like today. Today I was trading counter trend, but also I wanted to see the range high and my stop loss was 150 points. I was like, leave it, right? Right. It sucks because it goes, but it's just like you have to cover the true invalidation. Like, Cam, look at this today. Today, the only reason why I didn't take this trade is because for me, I'm catching the bottom now. Like if I'm taking this entry, I'm catching the absolute bottom, and my stop loss has to be this low. Yeah, it's a 3R trade, but I'm now demanding price comes into even 2R. I'm demanding price trades into these highs up here, 300 points away from market price. So I'm demanding a reversal, and I didn't actually know if market was going to reverse for sure. But look, if you jack up your stop loss anywhere else in here in C2, you're going to get stopped out. You need to cover that low. So yeah, that's why like I just realized if it's not risk adjusted for what trade I'm actually taking, I'll just let it go and just live with it if it goes without me. Okay, let's see what happens this day, guys. Wednesday, previous day high again. We can mark out 50% of the range. When we're trading all-time highs, the anticipation is that more all-time highs are going to be created, especially when we're in a classic expansion week now, right? Monday low of the week, Tuesday failure swing and SMT, Wednesday and Thursday should expand. So let's go to the 1 hour chart and keep trading. Sorry, guys, I went one candle too much. Okay, it looks like a bank holiday. I don't know why this looks so bad. So what we noticed coming into the New York session is first, we have previous day high ran on ES with SMT at 8 a.m. There's no reversal signature in here, but we're going to mark out the relevant liquidity, right, which is this high. If we are going to come back lower into the range, we're going to form an SMT at one of these highs. So 8 a.m. does not reverse. Clearly, it does not reverse. Okay. 9 a.m. Go to the, sorry, let me mark on the hourly lows as well. We only have SMT at the highs, so we have all these hourly lows. So I'm going to mark out these London lows, and I'm going to mark out this Asian low. Okay. And 9 a.m. pushes up, no sweep. See the previous day high. And now I'm looking in here and saying we have SMT at the highs. I have all of these lows that this looks like such barcode PA too. So I'm considering potentially trading back into these lows because I have SMT at the highs. Shit ton of accumulation here in the market and no good low of the day with SMT. There's no SMT at any of these lows, right? So I only have SMT at the high. We're trading in a range. We sweep out this high with SMT a previous day high. I get a change in the state of delivery in here. The only issue with this trade, guys, right? The only issue with this trade is that you're trading short in a very, very clearly bullish market. This is a bank holiday for sure, I think, right? Surely this is a bank holiday. Let's see what happens. This is a bank holiday, right? July 4th is a bank holiday. Well, there you go. You got your 2R, guys. I mean, that's the obvious trade to take. I think this is just like July 4th, though, is a bank holiday in the States. But yeah, that would be your trade. Pretty obvious, right? No SMT at the lows and a shit ton of equal lows, for lack of a better word. And then you can see we have SMT at the highs. So you take that 5-minute SSD, take that retest, and just short down to these lows or these lows. And then, of course, remember what we said about the previous day 50%? Maybe we'll cap the range and we'll come back into here. Your job is not to call a 19RR trade. Your job is to trade into those lows, right? Let's see what happens on the rest of the daily candle. I'm pretty sure bank holiday. Right, it is a bank holiday. We end the day at 12. So yeah. So if you want to trade on that day, you also get 2R. So now you're up 4R on the week, and it's Thursday. It's one day, so I'm going to have to rewind, guys. I'm not going to be able to do my daily chart analysis for the next day because it's all one day because of the bank holiday, unfortunately. So we're going to have to stick to our daily levels from Wednesday for Friday. Yeah. So now I'm marking out the previous day high. Previous day high. Previous day high. And we're going to mark out the previous day low, which is going to be actually right in here. Okay, cool. What I'm looking for is right longs because we have SMT that forms at this previous day low right here at 6 p.m. So let's see what happens by the time New York opens. This is going to be for the last day of the week, I think, right? Friday, yep. Okay, we're just ripping. London, 5, 6, 7. Let's play out 8. Okay, whoa. Interesting. So now I can see we have SMT that forms. Let me just mark this out real quickly. Let me get rid of all these other levels, guys. Let 8 a.m. form. As soon as 8 a.m. prints, I see this. This is the big one for me. So we've accumulated essentially for the past 2 sessions. Asia and London have both offered accumulation to the range. 8 a.m. has taken out both sides. This is known as a double purge. So now I'm considering LR to the side. Because again, I'm bullish, right? All-time highs. We accumulated. We came back in the range. Right? We have SMT at the lows. We have no SMT at the highs. Obviously, we're at all-time highs. So I'm considering longs to that high. This is the thesis for my trade today. All right, 8 a.m. just takes out both sides of the range, and we leave an SMT at the lows. Perfect. Does 8 a.m. reverse? Nope. 8 a.m. does not reverse. A reversal will require me to close. Yeah, I'm going to need to see us close through this candle here to say we reversed. That will be my changes to delivery. Even though we could say it's here. It's hard because it's the news candle. Yeah, I'm going to want to see price form a 50-minute opposing run. So I'm just going to wait for 9. Okay, 9 forms that opposing run. Close above. There's the order block. I can trade 9 a.m. now. I wait for 10 a.m.